What is going on, guys? Aere here, back for another video in our How to Become a Master Trader TA series. So far, a lot of you guys have found this series, and that's very heartening to see that there's a lot of eagerness to learn this out there. Today, the video is going to be focused on deltas, CVDs, buckets. We're going to be taking a look at a few different things and how they can help you become a better trader. So this is video number 4 in our series. If you're just finding us, make sure you start at video 1. The link for the playlist will be down below. Video 1 was on expectations, best practices, and advice. Now, that is by far the most important video. Now and forever, you need to have the proper expectations. You need to have the proper trading plan, or at least start formulating it. If you don't, and you go into this expecting to become a master trader overnight, or even in 6 months or a year, you are starting off on the wrong foot. So make sure you start there. The second video, we walked you through how to set up and a little bit more than basics, I would say, on trading view, kind of an intermediate trading view setup, and then what indicators you should start with, kind of giving you a canvas to start painting on, right? And then the third one came out a day ago, I think 2 days ago now, was mastering liquidity and the order books. And I gave you a bunch of tools and showed you kind of a more basic strategy before we get into some more advanced stuff in the next few videos. Top of that, I've posted a lot of tools in Discord in my Class TA channel. I'm heartened again to see a lot of people have joined Discord over the last few days. I mean, dude, there's 2 weeks now, I've got like 10 videos on the channel. The first video is up to about 400 views, 300 on the second one. Video a couple days ago, 151 views. That's nothing to sneeze at. That's huge. We broke 100 subscribers, so I appreciate you guys for doing that. Like, comment, subscribe, turn on notifications, stick around, hang out with us. We're going to be growing, or we'll be growing this community huge. Like I said, Discord is blowing up, man. If just look at the first video I made when I showed the Discord and look at it now. I mean, there's people in here talking. The first 100 active community members who join it. Active is the key word there. I don't want people just joining it and not saying nothing. I want to get to know you. Are going to be grandfathered into any type of paywall that I do in the future. But enough on that. That's up to you. If you want to join it, join it. I would appreciate it. Discord.gg/Alpha Aere. So much great information in there. I'm going to start doing Sunday night classes. For now, they're going to be free. My time is dollars per hour that I make is a lot of money. So take advantage of this now before I start charging for it, and be grandfathered in. So without further ado, guys, we are going to start talking about the CVDs, the deltas, how they can help you, how they can help foreshadow some movements in the market. Like I said, my favorite saying as of late right now is you do not need to be a whale to swim with them. Stop being a guppy. Stop being these small spot order CVDs who oftentimes are doing the opposite of what the whales are doing. So I'm trying to make this series to get you to swim with the whales. And what better way to do that than to see a simple line of exactly what the whales are doing. So we're going to cover that today. Buckle up, stay tuned. Appreciate you guys. Smash that thumbs up button, subscribe, hop in Discord, and let's just get into the video. So first, before we start talking about this, you need to know what this is. So let's get you the textbook definitions of what we're going to be talking about in this video. So you're going to hear the word CVD. You're going to hear the word Cumulative Volume Delta. You're going to hear the word Delta. You're going to hear many other words as well. You need to understand what these are. You do not have to trade with this. You do not have to use CVDs or Deltas. However, it gives you an edge over other people. Promise you, regular old day traders, whales, they use this information. You can definitely do it without it. There are traders out there who do not use this information. You have to tailor your trading strategy to you and what works for you. Maybe this doesn't work for you. It works for me. I use it. It helps me anticipate which way the market is going. Like I always say, if you want to swim with the whales, you need to know what they're doing in order to swim with them. You have to know where they're at. So CVD is Cumulative Volume Delta. It is a way of using delta to measure an asset's mid to long-term buy and sell pressure. It also can be used for scalping, for short-term pressure as well, which I'll show you here in a little bit. So what it does is it compares buying and selling volume over time and offers insights into market behavior at a specific price point. So to understand CVD, we need to know, again, what regular delta is. What the heck are you talking about, Aere? Well, in its traditional form in derivatives trading, delta is the difference in trajectory between an options price and the price of its underlying asset in traditional finance markets. In crypto, delta commonly appears as a volume tool, measuring the difference between buy and sell pressure at a specific price point. Here's an example. A candle chart will display buy and sell volume for each candle. Be that a 1-minute chart or a 1-month chart, each candle, however, contains an amount of an asset that was bought and an amount that was sold. So delta measures the relationship between the two for each candle. So let's take a look at these large spot orders here. So large spot orders, delta right here, right? You can see, you know, on TradingView, you, in most cases, you would just see a volume. It would just be one candle volume. Here, you're breaking it down. So we're going to see if this is a sell side heavy, which we call the buckets when you start getting them like this, right? You know, you can kind of draw a line under them and it becomes a bucket. So it's sell side heavy or top side heavy. So in layman's terms, if you look at the volume on the bottom of TradingView here, it's just a red and a green candle. So yes, it means that that's sell side heavy, right? If we go to a minute chart, for example, there you go. It's tough to read, right? Like you have to really sit there and focus on it. So you can see, yeah, this candle was red. It's sell side heavy. This candle's blue. It's not easy to read. So what delta does is it takes those candles and breaks them down for you. For example, the green, you know, up top, red, you can see it easier. It's easier to spot the buckets like here, here, here. That's what delta is. On top of that, what TradingView does not show you is all the perpetual futures data, the swap contracts. What day traders use, what whales are doing on the future side of the market. You don't get that on TradingView. So while this is perpetual swaps here, this is spot orders here. So delta hovers around 0. It's going to be 0. When there's more buying pressure, it goes up. When there's more selling pressure, the delta goes down or turns into a red candle. If it goes up, it turns into a green candle. That's what delta is. So CVD, instead of focusing on a specific candle, like we just looked at with the buckets, those are specific candles. Cumulative volume delta does not focus on a specific candle, but rather a time period. So CVD is shown on the right here. Delta is shown on the left. This one happens to be on spots, but it also has it on perps as well. So as we're going up here, you can see that the pressure is mounting, and traditionally and typically, but not always, but most of the time, the price rises as a result. So CVD takes the relative differences in trader behavior, so the shorts, the longs, and combines them over an extended time period, hence cumulative volume delta. So what does CVD and delta show? Well, the result is analysis that shows how market participants behave at one price point as it reappears over time. That price point can be anywhere by taking local highs and lows on a chart. The outlying price points, known as swing highs and lows respectively, can indicate how market treats attempted breakout or breakdowns. You can find divergences in CVD just like you can find divergences on momentum, on VWAP, on the RSI, everywhere else. This is a key tool that crypto traders and traditional finance people use. So crypto CVD divergences. It's possible to see demand or lack of it for an asset as its price exhibits longer term trends. Sometimes those price trends can run into a contrast to trading behavior. For example, sell volume can be dominant while spot price is rising and vice versa. Using that information, it's possible to gauge both market participants' ideas of where the market is headed and time one's own trades to take that sentiment into account. So here is a couple of examples. Here's some exhaustion examples. So the trend that you're in is getting exhausted if, for example, the price is rising, but the CVD is falling. I posted this in Discord for you too. Downtrend wise. So if we're in a downtrend, that could be exhausted if the CVD starts trending up. Same thing with absorption, right? So if we make a a high, then we make a lower high, but the CVD makes a higher high, that could be an uptrend that is coming. Vice versa on the downside. So we make a low, we make a higher low. That should look like we're going up, right? Not so fast. The CVD made a lower low. So they did the opposite of each other. So possible downtrend coming. So as crypto traders, we're always trying to pick out patterns. We're trying to anticipate where the market's heading. Oftentimes you'll hear things like swing high, swing low, lower high, lower low, you know, higher low, whatever. You hear that often. So if you're just looking at price and you see a high, and then all of a sudden made a higher high and you're getting excited and you're thinking to yourself, oh my God, we're going to break out of this pattern. But the CVD, the Cumulative Volume Delta, is showing another thing. It's showing, you know what? Whales, for example, are starting to draw back a little bit. They're starting to come down. They're starting to kind of sell off a little bit. You're going to see some divergences as well between what whales do and what everyone else does. Sometimes they're completely different. You want to swim with the whales. So price is going up. You're making a high. You made a higher high. You take a long, all of a sudden the market dumps. But if you would have looked at the CVDs, you would have seen you made that high, but then you made a lower high. It's diverging. So I'm going to show you a real world example that happened within the last 24 hours of this. So here you can see a couple things. First of all, we bottomed out here, right? We bottomed out. Market maker started selling. Spot started selling. Everyone started selling except for who? The whales. They started slowly making those higher highs, right? And then boom, the price shoots up while everyone else was selling. So you got to anticipate where the market's going. On top of that, you could have looked over here at the deltas and seen that the MM spot orders, which are like 100K plus, and the small spot orders, which are, believe it or not, that's 10K plus. That's still considered a small spot order. We're sell side heavy, but the whales were buying. The whales were buying. So price went up. So even that was a divergence. There was a divergence between the large spot orders, the whales, right, trending up, and then the MM spots, 100K, and the 10K, the small spots, were trending down. The main site, really the only site that I use to visualize this data, because that's what this is. It's data visualizers, is thekingfisher.io. Not only do you get all of this great information, but you get liquidity information like I gave you yesterday in the video, the last video that I did. Top of that, you get the liquidation ratio, liquidation map. You know, you got this map, which is the heat map, right? Which is essentially what we went over, exactly what we went over in the last video. It's gonna take a second to load here. Like this, you get to see where all the liquidity sits, right? That's exactly what went over in yesterday's video. You also get a whole lot more than that. This platform, in my opinion, is one of the best, if not the best platform out there. It's not cheap. And some of these pre-made templates you have to purchase yourself. Pretty cheap, right? 1 year is 0.004 BTC, just as an example. But so much information on here, so much order books. It's got it all. I mean, it really, really does. So the price for this, for 3 months, $109. If you sign up for a year, it looks like, so on and so forth. So here we go. 6 months, $572. 3 months, $300. 1 year, $1,000. So this is not a cheap site by any means. So you don't have to use this site. I'm going to show you a free option. And real quick, before I show you a free option, which is aggr.trade, on kingfisher.io, it is highly customizable. So you can set all this up yourself. You get to know a little coding and stuff like that. But, you know, and they do have some free templates as well. So if we go back to the bazaar here, this is all the default Kingfisher templates. It's standard. It has everything you need for effective scalping. But you can customize this highly as well. Aggr.trade is a free version, not as good, but very, very good. It's up there. It's close. So this is what I was using when I first kind of started dipping my toes into the CVD, into the deltas, as well as some other sites. There's lots of them out there. I mean, you can literally just Google it, and there are a whole lot of options. Most of them cost money. A lot of people aren't going to just give away stuff for free. Now, Coinalyze does have a free version as well. Coinalyze, let's go to it. This is kind of what I went over yesterday as well. So if we go to BTC here, we click on that. It's going to start load the basic generic chart. You got your open interest. You got, this is free, by the way. Indicators, aggravated CVDs, futures, coin marginated contract, stable coin, aggravated spot CVD. Boom, there you go, for free. Now, a lot of times with the free, you're not going to get it broken down into large orders, small orders, etc., etc. It's still good information. It still helps you give you an idea, since obviously the whale orders are going to be heavily weighted there, of which way the market's going to go. So back to aggr.trade. This is really the best free one out there that I have seen. When you first go to it, this is what it's going to look like. This is their basic template. This is also highly customizable. You can add indicators just by hitting add. It's got all these indicators right here. You got CVD Perp, CVD spot right there. There's your CVDs. It's on there, right? Off, on. There it is right there, Perp. You want to add another one. You want to do CVD spot. You can use specific markets if you want. So highly customizable. However, I made this super easy for you in our Discord, in my Discord, our Discord. I mean, it's all of us. It's a community, right? If you go to, join it, verify, make sure you're not a bot, go to class TA, scroll all the way up to the top. You can download my templates. It's just a text document. And then all you do is you go to the three little dots right down the bottom right-hand corner of the screen down here, click it, go to settings, and then you can just do new, upload a template file, and then mine are in my desktop right here. Boom, aggr.trade. And then I got Aere and Aere all in one. So if you do the all in one, just double click it, hit import. Boom, there you be. You got your big orders, whales, normal orders, small order CVD, your price. You got your perps and your spots, the buckets up there, as well as the CVD up here as well. And you can add indicators to this, take them away, customize it highly. Liquidations down below. It says all information that you would need to get started for free. And I've done the work for you, right? You want to send me a donation, send me a donation, but I'm not charging you for this. Even though this took a lot of work and coding, programming. So it's free for you. So hop on in Discord, grab this template, upload it, and start learning. Start backtesting. Start seeing where the divergences are. Start seeing what happens when we're sell side heavy, when we're top side heavy. Start looking at the chart, and eventually, I'm telling you, it's just going to click sooner than later, and you're going to start seeing things. So the choice is up to you. I prefer kingfisher.io. I think it's the best all-around program platform out there. aggr.trade to get you going, to get you to learn it. Maybe you graduate to Kingfisher eventually. Like I said, everyone has a different budget. I don't know how much money you got. It's up to you which one you choose, but you should choose one of them, whether it's the free one or pay to be the boss on Kingfisher. So everyone keeps asking me what my strategy, what my process is. This is all my strategy and my process. Everything that I've gone through for now, the last 4 videos, including this one, is my process, is my strategy. I want to understand the market the best that I can. First thing I want to do is figure out if the market's going up or are they going down. So you can utilize everything we've learned so far to help you gauge. We haven't given you all the tools yet, but we're getting there, trust me. But this is my process. This is what I do. So once you figure out which way the market's heading, then you have to find your entry. And that's where a lot of the indicators and some of these next videos that we go over, we'll go over. But, how do you use the CVD and the spot information is to gauge which way the market is going. If you see the large spot orders are trending down, there's a good chance that the market is going down. If you're seeing a bunch of sell orders firing off, there's a good chance that we're going down. If you see exhaustion up here, right, at 29,416, right, well started to sell, price is going to come down. And it's been slowly coming down since. Nothing's in a straight line, right? But, you could draw a line from here and, it just keeps going down. So you can find trends with the orders, with what the whales are doing, with what the market makers are doing, with what the small orders are doing, the general CVD and the spot deltas and the perps as well. So there's both. So this is the spot on Kingfisher. This is the perps on Kingfisher. This is the perps on aggr.trade spots. The Delta perps, Delta spots. So you can see right now, look at this. I mean, it's just heavy. So would you take a long right now? Based off what I'm looking at, only using this tool, I would say no. However, you shouldn't only use one tool. You got to put all this together and form your strategy off this. If I was just looking at this without seeing anything else, I would say, oh, we're coming down. However, you got to look at liquidity. You got to look at the indicators, at trade and view. You put all this stuff together. When you enter into a trade, let's say it's a short, for example, you want to see this CVDs come down. If you enter in a long, you want to see these CVDs come up and you want to see higher highs, right? You want to see that coincide with the price. If it's coming down and you enter into a short, you want it to go down. You want to see lower lows, higher lows form. That means you're on the good side of that trade. So great tools for data visualization that can help you gauge which way the market's going. You can literally watch what the whales are doing. You can go all the way down to a 1 minute time frame, to a 1 second time frame. You can literally follow and swim with the whales. This is why this is important. It's going to bring me back, and I'm going to end the video with the quote one more time. You don't have to be a whale to swim with them. You just have to know where they are. And this tool visualizes where they are. It lets you see what the whales are doing from a volume standpoint. Are they selling heavy? Are they buying heavy? It lets you get an overall general idea. You want to zoom out. Let's go to a daily time frame on this real quick, just to show you which way the market overall, generally speaking. Let's zoom out, right? Zoom way out here. Let it catch up. You can see that the market spot, it's trending down. It's low. There's not a lot of volume right now. I guess I zoomed too far out on the large spot orders, but you get the picture, right? You can do this on both. It can take a while for this to catch up, but you can do it with both perps and spots as well. You can see the overall trend right now is down. You know, the overall trend right now on the deltas seems to be sell side heavy, right? I mean, look at this. I mean, we haven't been real sell side heavy until kind of this block up here where they started ticking up. And here's how we called the top of the market. This is how smart traders call the top. There was a lot of reasons, but here was that 2021 top and then that 69,000 top in 2020 in November. So this is November and this is May here. So we saw the CVDs just kind of start skyrocketing up, right? And then what happened? We saw that retrace. We made a lower high. So there was a divergence in price. Well, price went up. The CVDs went down, signifying a potential downturn in the market, that we have exhausted the trend. I got out up here. I mean, I completely got out, got back in around here, saw Terra Luna happen, got back out again, and got out again. Rinse and repeat. I mean, this is how you got to do these things. So you're continuously multiplying your portfolio. So this is how these can be used as a very, very powerful tool to help time the top, bottom of markets, to help time your trades, and to swim with the whales, like I said. That's it for today's video, guys. Play around with these a little bit. Back test on it, set them up, hop in Discord, grab the templates off there. This is another tool to throw into your tool chest, and I hope I showed you how powerful this tool can be with calling the tops and bottoms of markets, with entering into trades, and more importantly than that, just figuring out what whales are doing. Before I forget, I wanted to show you the templates that I've just showed you guys. So if you click on the bazaar right here, Kingfisher Marketplace Bazaar, the SKU Premium is the good ones to use for me. So SKU Premium by SKU here, and then I use the BTC Perp Delta and CVD buckets. That's the chart we were just looking at, and then the Spot Delta and CVD buckets. Top of that, I also use the free one. Really all of them, but mostly I use, actually it's up here, sorry, very, very top, the market order books, where you can see the order books. You can see all the liquidations, the GEX, everything that we talked about in the previous video. Just wanted to get that out there for you guys. Appreciate you guys for watching. We're getting closer and closer to some strategies. The next video is going to be on finding and identifying patterns in charts, as well as patterns in the specific individual candles themselves. I'm hopefully going to get that out today too. It's finished. Partially finished. I just need to kind of throw it together and add a few things, but I appreciate you guys for watching. Hop in Discord, discord.gg/Alpha Aere, and smash that thumbs up button. I appreciate you guys. We'll catch you later.